on Australia's business channel. This is Mediaweek.
Hello, welcome to the program. Ahead, after a tough first year in the job, APN News and Media CEO Brett Chenoweth tells us what he plans for the company this year. As Facebook prepares to go public, we look at what that would mean for its ad revenues and advertisers here in Australia. And we'll look at the battle of the weight loss shows on free-to-air and new channels and programs appearing on subscription. But first, to the debate about why Gina Rinehart has upped her stake in Fairfax. In a stunning raid this week, she's understood to have snapped up almost 8% of the company, taking her holding to about 13%. The mining billionaire sits on the board of 10 after buying a 10% stake in it back in 2010. Our co-host James Manning, the editor and publisher of Mediaweek, joins us now. James, looking at this, there's been a lot of talk about why she's done this. Does she want a seat on the board? Some fund managers, shareholders have already said that they would oppose that. There's talk that maybe she wants to try and influence editorial policy. What do you think? Well,
I think she probably wants a better voice, wants to be heard. And if you look at what she's already achieved through the holding in 10, you know, how much more do you read about Gina Rinehart? She's had a lot of magazine covers, a lot of press just over that investment. She becomes a significant shareholder in Fairfax. What's going to happen again? She's probably not naive enough to really think, look, she's going to be able to waltz in and give them a few ideas what they could be putting in the papers, but she will be heard and she will be listened to.
All right. Well, a rival newspaper publisher to Fairfax, of course, is APN News and Media, which also has newspapers and online sites across Australia and New Zealand. It's also the biggest outdoor advertising business in both countries and owns major radio networks as well. It's also boosting its digital presence with some recent acquisitions. The CEO of APN, Brett Chenoweth, joins us now. Brett, thank you so much for coming into the studio. We just wanted to, I thought, well, why we've got you here, we just got to ask you about Gina Rinehart and reportedly her upping her stake in Fairfax. Some have called it a pretty savvy, well-timed move, actually, given that we've seen the share price fall. Any thoughts to add to this?
Yeah, look, I mean, I think it adds to the sort of colour and movement of the media industry, full stop. But no, media businesses, I think, are well and truly undervalued right now. They've had a tough, all media stocks, including our own, have had a tough 12 months. Fairfax is no different, and it's trading well below, you know, I think, the true value for that business. So I think actually her timing's relatively good. I think a heavy investment in media at this time is well timed, and frankly, from a media industry perspective, we welcome it with open arms. You know, anyone investing in media, and particularly in newspaper stocks, when newspapers do get hammered from time to time, you know, is a positive move in my view. So we welcome it, and I think it's a good move, and I think her timing actually is pretty good.
And just quickly, maybe influencing, you know, what goes in the papers. Would you have a hard time doing that, let alone your board member?
Yeah, no, look, I think it's a furphy and a sideshow, really, the discussion around editorial interference. There's no way that a board member or a shareholder, let alone a minority shareholder, could influence editorial. And certainly in our business, you know, we wouldn't even contemplate it for a second. And I don't think any serious media organisation thinks that could potentially occur. So I think, again, that's a sideshow. I don't think there'll be any editorial involvement at all. But as you said, it does definitely generate press and column inches, and she now has a pretty strong profile on this side of the country.
Yeah.
Just want to look at your first year. You just marked your first year in the job, a top job at APN. Pretty tough year, though, to come on board.
Yeah, it's been a tough year. I mean, we started the year last year in a pretty tough circumstance with floods and earthquakes. I mean, half of our business is in New Zealand, half is in Australia. So geographically, we had a pretty tough start. And the ad markets generally in the media sector, in all aspects of the media sector, were pretty tough last year. And, you know, we think about 2011 as a real low watermark. And certainly, you know, I think if you're going to have a tough year as CEO, having the first year as CEO is probably the year to do it. But we used the year actually to really restructure and reorganise the organisation and to rejuvenate and regenerate the culture of the business. So, you know, it was a tough year, but, you know, I'm actually pretty proud of the last 12 months. Results are tough. Our stock price has taken a pretty tough time over the last 12 months, but we've got a very, very strong portfolio of businesses. And given that we're a multimedia focused business, so we have sectors, we're in different sectors of the media, that's actually stood us in pretty good stead. So whilst newspapers had a really tough time last year, we had a very strong outdoor result. We had a really improved radio business, and we're very proud of that. And we've made some inroads into digital. So yeah, you're right, tough start to the year, but really good inroads, and plenty of work was done that'll be on the scoreboard over the next couple of years.
We're already into the second month of the new calendar year. how's it look for you guys so far? How did the last year end, and what's the feeling January into February?
Yeah, look, the ad markets again are still relatively subdued. We saw that in November and December they were pretty subdued across the board in all sectors really. We saw radio had a pretty flat last quarter. I think the radio market grew by sort of 0 to 0.5% in the last quarter. We were fortunate our business grew at sort of 5 or 6% in that last quarter, our ARN business in Australia. So we're happy that we're growing ahead of market in the last quarter. That sort of has flowed through into January. So across the board, I'd say the markets are relatively subdued. We're seeing some bright spots around some of the radio and outdoor numbers we're seeing. So, those sectors, along with digital, look like the sectors of the media that will have a better relative year this year. And, we're looking forward to a year without any sort of disruptions, hopefully, floods, earthquakes and other things. So, on a year-to-year basis, I think it'll be a better year than 2011. It certainly has started in a better way, but it's not going to be a major bounce. It's not going to be a dramatic uplift.
Just on outdoor, you said back in November, I think it was, you were looking at potential partnerships with the outdoor division. Can you give us any update on that at all? Yeah, I mean, our outdoor business has two focuses, if you like. We've got our APN outdoor business, which is wholly owned. We've also got a strong partnership with Clear Channel, obviously out of the US, and we've got 2 outdoor operations with them. We said that because we're in outdoor in such a heavy way, being the largest outdoor player in this market, that we think that there is more we can do from a consolidation perspective. We think there are opportunities to build out our platform because it is a strong platform, and we also think there are opportunities to win new business. And on both those fronts, we've been pretty active. The business has won some major new contracts in the last 6 months, Yarra Trams and others late last year. And we have been looking at the market closely and reviewing from a strategic perspective where we should play. And we think, again, we can do more. There's clearly activity now with the O-Media takeover bid from Champ. We're watching that closely. We've taken a minority position in that business to make sure that we've got a seat at the table during that process. And we've talked to other players in the market about partnership opportunities. So, from our perspective, I think you'll see that we'll do more in outdoor rather than less.
We've seen a few new media CEOs appointed recently, and they've brought in some new teams. You came in last year, brought in some new people, and Matt Crockett, I think, has got a development role. Warren Bright looking after a lot of the newspapers. You cut back or sort of pruned some of your newspaper costs significantly in some markets towards the end of last year. Is that something we're going to see this year, a real sort of hard look at print costs and maybe developing in that digital space? Yeah, both of those things. I mean, on the executive front, we made major changes last year. We brought in a number of key executives, Matt and Warren being 2 of them. We will continue to bring in new executives into the organisation as it makes sense. These media businesses, like any good business, need to be rejuvenated, and bringing people in, someone like Matt, for instance, who does not come from a media background and is looking at things through a different lens, is actually quite important, we think, and quite invigorating. So we'll continue to look at the talent pool because these are big people businesses, and that's important. And we will continue very much, particularly in our newspaper business, but across the board, to be vigilant about cost. The DNA of APN, certainly, and a long time before I arrived, is very much around cost containment and very, very focused on margin. So that will continue. We will make sure that we manage down our print costs, obviously, and all input costs, and we're keeping a close eye on what we're doing with respect to hiring. And even some of the new developments that we put into the business, we're making sure that we are driving more efficiency rather than cost containment necessarily. We're not trying to slash and burn costs. We clearly have told the market that we're going to keep a cap on our costs this year, but we are very much investing in efficiency drives, and that's actually starting to prove some real dividends because, as you said, we started that work well and truly a long time ago in the middle of last year.
We've seen partial paywall set up at the Australian. What are you doing in terms of that online news content and trying to monetise that? Yeah, there's 2 elements to it. I mean, we've got, in Australia, we're a regional media business in press. So we have, we've got a very, very strong local relationship with local communities and a deep user engagement, but also a deep relationship with advertisers. And we see more advertising revenue, more opportunities to offer services to consumers in those markets that don't necessarily require paywalls. So, we've obviously got websites for each one of our newspapers in Queensland and Northern New South Wales, for instance, and obviously in New Zealand. And we've got mobile applications for each of those as well. And we're seeing those revenue streams develop, but we're still seeing plenty of opportunity in the print product. And in regional Australia, it's quite different, I think, to some of the metro markets, and certainly different to newspaper markets in the US or the UK, for instance. So,
in our particular business, we don't see a huge requirement today for paywalls. We see an advertising model that still makes sense. We're definitely looking at and experimenting with paywalls in our New Zealand business, where we have the Herald, which is a large metro newspaper, and we're looking at opportunities to monetise digital dollars, if you like. But I think you won't see us putting paywalls around any of our core content this year.
There's a anticipation there'll be a bit of media regulation movement this year. There's different inquiries going on and reports coming out. Are you concerned about much that will happen there? And do you lobby? I guess you lobby through the different sectors, the industry bodies for each of those sectors, but do you sort of go above and beyond that?
Well, look, we're believers that the regulatory environment needed to change. There's no doubt that with convergence with digital developments, that over the last 10 years the regulations have become stale. So we're definitely supportive of the convergence review. We participated in the review and we put our submissions forward, and indeed we'll put a supplementary submission in the next week. So we're believers in change for sure. We also think that that the review, certainly the initial findings, they seem relatively positive. I mean, there's a lot of detail that needs to come out, and there's obviously discussions around public interest test. There's a discussion around the 2 or 3 media to a market rule, the cross-media legislation. There's a lot of change coming, and frankly, we welcome the change. We think that there's opportunity there for us and for other media players. We also think that media as a sector, frankly, is a pretty robust sector when it comes to public policy and adhering to commercial ingredients. So we feel relatively good about our position, and again welcome the convergence review. It'll be a while till those recommendations are enacted, of course, but we'll continue to participate, and not just through the industry bodies, but on our own right. We think we should be talking to the industry bodies and also to government.
Now that you're a year in, I just wondered, looking a year ahead, where would you like the company to be? Obviously, you mentioned there the share price has taken a real beating, like many in the media sector, down some 70%. Where would you like to be in a year's time? Yeah, so look, there's 3 things, if you like. The first one is we definitely want to make sure that we deliver on our cost containment focus this year. So, nailing the businesses that we have and making sure that we drive the biggest margin we can out of those businesses is incredibly important. So we're continuing to do that. Secondly, driving additional revenue wherever we can get it is important. So I think in tough economic times when ad markets are soft, you definitely need to be a little bit more active in the market and certainly more aggressive. So I think you'll see APN is a lot more aggressive across the board, whether it's in our newspaper businesses or radio, where we've invested a lot of time and effort in the last 12 months in new talent, programming, marketing, and we're being more aggressive against our competitors, Oz Stereo and DMG, for instance. So we'll be a lot more aggressive over the course of the next 12 months, and we'll continue, thirdly, to develop out our digital businesses. So, we don't have the largest digital portfolio in the country, but we've got some really neat digital businesses that are growing very quickly, and we're going to continue to give those fuel. We'll continue to invest in the digital development in our core newspaper businesses as well, but we want to make sure that we differentiate the revenue streams. So we're developing businesses that do drive additional revenue streams for the group. So I think you'll see from us a relatively aggressive stance in the marketplace from a revenue perspective. We'll deliver on cost initiatives, and we'll continue to reduce cost across this group, and we'll continue to reposition the business for a digital future. And I think you'll see from APN over the next few years, again, particularly when the markets come back, the business will change substantially. And we're looking forward to that, and we think we've done the legwork for that.
Quickly, maybe you're invested heavily in Australia and New Zealand.
Yep.
Any comment about both economies? Is one poised better for growth this year, you think, than the other? Or?
Yeah, look, the Kiwi economy is always tough. It's a small economy the size of Sydney, and it's clearly suffers from size. After winning the World Cup and an election result with a very stable government and a government with a majority and a very vibrant and successful agricultural economy in New Zealand, you'd think that the economy was actually going better than it is, to be honest. Business and consumer confidence are coming back. They're not back to where they need to be. So I think the Kiwi economy, excuse me, right now is slightly behind where the Australian economy's at. But both markets we think are very, very strong markets for media. We've got strong positions in both markets. So I think our exposure is about right to each economy, and we're certainly investing in both markets.
Been great to have you here. Thank you so much for coming on the program.
It's my pleasure. Thanks for having me.
Brett Chenoweth there, APN CEO. Coming up on Media Week, what will the Facebook IPO mean for advertisers here in Australia?